What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's rather epic London session on EURUSD, which had offered us some fantastic continuation trades and a perfect ICT 2022 model reversal. First continuation trade bagged over 7R, the second one 2.6R, and the reversal is currently ongoing. We've hit optimal trade entry with a potential target of taking out Asia high. I'm going to be perfectly honest with you, I haven't taken these trades. I've had a good week so far and I'm following ICT's advice. Due to NFP release tomorrow, so major red news on Friday, I'm sitting on my hands. I don't want to lose the profits that I've already bagged this week, and price movement can be a little bit erratic moving in towards NFP. However, I'm kind of regretting not trading because these are textbook setups. So let's jump into the high time frame analysis now and see how we came up with these pretty epic entries. As always, we're going to start our analysis off on the 15-minute chart, where we are looking at our session liquidity tracker, showing us the untapped levels of session liquidity with these extended green lines. Links to all of the indicators that I'm using are down in the description below, so if you'd like to replicate my charts, then head down there for details. You will note in this video I'm using a slightly different fair value gap indicator. It's not one that I recommend, it's just as I'm recording this, the fair value gap indicator that I'm using isn't working for some reason, so I've dropped another one on there just for ease of use. Right, so on 15-minute charts, we can see that yesterday we had quite a large pullback. This week is a busy week with red news folders, specifically NFP tomorrow being Friday, which is why I've not traded this session in live time today. Sitting on my hands, aiming to keep the profits that I've made already. So we can see into Asia, we've had the pump up in New York AM session, which puts yesterday's high in, and then we're kind of consolidating in the middle of the New York range. Asia is displaced upwards. We've taken New York PM session high, but we've been unable to take the New York AM session high. So yesterday's high is still intact. We've had essentially 3 pushes into this high. 1, 2, 3. So this is like the 3 Indians pattern that ICT has mentioned before. And I believe, if I'm remembering it correctly, he has said if we get 3 pushes into a high, it doesn't actually mean we need to take the high to sweep this liquidity. So this could in fact be engineered liquidity here looking for a pullback into the range. So that's how I'm reading that. We've obviously got 2 very large inefficiencies here from the Asia pump up. So we may be pulling back into the range before we take a run at yesterday's high. I'm going to mark out these just so they will stay on our charts as we drop down the time frames. So that's our first 15-minute fair value gap, our second 15-minute fair value gap. You can see we have left a tiny 15-minute fair value gap here as price is pulling back. So there's the first indication that we may be getting some sell side action in play. Essentially, we're going to have to drop down into the lower time frames, see how price is reacting, whether we're going to sweep these highs or pull into the range and potentially look for a reversal lower down in the range. Drop onto the 5-minute chart now. So our session is about to open at 1 AM. So this is the open of a brand new 4-hour candle. This is why I come to the charts at 1 AM to start monitoring for trades. Let's start skipping forward. So as London opens, we've tapped the top of the 15-minute fair value gap and we're taking another run at this high. We can see we've got 5-minute fair value gaps here, which have been respected on the bearish side. So we've closed through this bullish fair value gap now, and we're creating bearish. So it'd be interesting to see if these are respected, so we can maybe look for a continuation lower or sweep these highs. So you can see we've respected this fair value gap, tapping the 50% of it 3 times now, and dropping away with a large engulfing candle coming into 140. According to Forex Factory, there's no red news. However, TradingView is showing me this balance of trade at 2 AM. So I'm going to be wary of the 2 AM candle. Displacing into the range. So we're coming up to this 2 AM candle now. We've closed below 50% of this 15-minute fair value gap. That's very bearish in my opinion. So I like to see 50% of the fair value gaps hold. So the fact that we are now closing below 50% shows me that this may be failing, which leads me to think that we've got lower prices in line as opposed to the higher prices. So we are looking at these areas down here. We've closed fully below that fair value gap. This could now act as an inversion fair value gap. So we'll look to see if we get any support here. We are currently below 50% of the range. Yeah, so we've just come into optimal trade entry at this point. We've hit this fair value gap now. So what I'm doing is, because we are looking like we're drawing towards the Asia low, potentially the New York PM session low, is I want to drop onto a lower time frame, onto the 1 minute now. See if we can maybe look, we're displacing lower, look for a Cameron model entry. So this would be a continuation model is what I'm looking for here. So the thesis behind the continuation model, why I'm looking at this, is we've had this very aggressive move up. This could drop easily as quickly as we've come up. We're leaving bearish fair value gaps now, so my eyes are on this low here to see if we can get a setup for a bearish push. We've had 3 pushes into the high, we've failed to take the high, we're pulling back into the range. We are below 50%, so I'm thinking that we may get a draw down to this. So I'm going to go for the Cameron model or a continuation model entry to get short. I'm going to delete this 15-minute fair value gap. So the time at the moment is 2:19. So for a continuation model short, what we want to see is our draw on liquidity is the Asia low. So you can see even on the 1 minute now, we are displacing lower quite aggressively. So my eyes are on the Asia low. So I'm looking for a sweep of this Asia low liquidity. We've actually got kind of relative equal lows. We had the new day opening gap down to here. These are kind of relative equal lows. So we have this liquidity here. So I'm thinking that the draw is down here. So for a continuation model, what I want is a sweep of a short-term swing high and then displacement back in line with targeting the Asia low. And I would like it at a nice round 15-minute candle entry. So we'll monitor the swing highs now. So our swing high is here. So we'll just keep an eye on these. So we've created relative equal highs here. We're into this 15-minute fair value gap. We've created relative equal highs. If we see a sweep of this and then a break lower, we're coming up to 26. So we're coming up to 2:30 here in the morning. So the start of a new 30-minute candle is opening. So we've swept this liquidity higher. Large engulfing candle. So we've just had 2:30 and then we've got an engulfment candle here. We have this bearish candle. We have 2 bullish candles. So these would be an order block lower. This would be a breaker block if we break below it. We've left the bearish fair value gap. So we can see this bearish fair value gap in here. That's our fair value gap. We haven't closed below this, so this is not a breaker block yet. However, I'm anticipating that this will turn into a breaker block. So this is the last down closed candle before we create a new high, and now we're going to break below it. So if we break below this, leaving a fair value gap, and this turns into a breaker block, then this is our unicorn entry with an already established draw on liquidity to be the Asia session low. So there's our close below this. We've broken this now. I'm anticipating that this is a breaker block. So we've got a fair value gap into a breaker block. It's the start of a new 30-minute candle as well. We engineered 2 equal highs. We've swept those highs into a breaker block. We've swept this high as well. We do have liquidity here. We've got a displacement candle. So this candle is larger than the candles around it. So it's an engulfment candle coming down with a break of structure, leaving this fair value gap. So that there would be my short entry. Stop loss above this high. And then targeting. TP1 would be taking out this low 2.9 out and then ultimately running that down to the Asia low. So we can see how we're building the confluence here. We have a breaker block, confluence 1, fair value gap, confluence 2, 15-minute new candle opening, confluence 3, sweep of liquidity. This is obviously an order block, the last two up closed candles. I'm building the story here as to why we would go short at this point. So entry of that fair value gap, expecting price to come lower. That's just tagged us in, it's just tapped the fair value gap again. Large displacement candle engulfing this. The entry could have been that fair value gap. You could have had a break, an entry as he took the break of the low. I would have gone for an entry in there, but anywhere in this region would have been the entry. TP1 will be taking this low. So again, you want to be quite aggressive because we are in NFP week. So it would be aggressive take profits, but TP1 at this point, which is over 2R, which you get more or less instantly. Look, 3, 4, 5 minutes, you're into TP1, and then holding this lower. So again, we can see we're displacing lower. Again, this aggressive move. So if we didn't get on this first one, we can still look, as long as this draw on liquidity isn't taken, look for the continuation model. So we've got a swing high up here. What's nice about this is we have broken through this fair value gap. So this fair value gap, which is our 15-minute fair value gap, has now failed essentially. So we're closing through the 15-minute fair value gap. The 50% of it could act as resistance. So we've closed through, we're coming into the new half-hour candle now. So this is 3 AM. We're coming into a new hourly open. Got that level of liquidity that we've highlighted. And we've got another one just below. Again, leaving bearish fair value gap. So if we could sweep some liquidity, we could look for displacement again as we're getting closer to this now. We know that this is the draw on liquidity. It's highly likely that this is the draw. So this was maybe the riskier entry because we were in the middle of the range with this fair value gap below us. This entry that's about to come up, so we've swept some liquidity here. We're at the start of a new half-hour candle, or a new hour candle, apologies. Again, we created these, engineered, look, relative equal highs. We've just swept them at the start of the new hourly candle. Coming up, we've taken this liquidity, we're into a fair value gap, so we're looking for displacement lower now. So we've got this bullish fair value gap. We've tapped this bearish fair value gap, we've left the bullish fair value gap here. If this fails, then this becomes an inversion fair value gap. So that has failed. So we now have an inversion fair value gap at this point. Price comes up, taps the inversion. There's not enough confirmation here for me. So we've only got literally the inversion fair value gap as confirmation at the moment. So I'm not taking a short off this. This is an indication that the bullish fair value gaps are not being respected. We've pulled up, okay, so we've swept some more liquidity higher. It's important not to get sucked into a long trade at this point because we haven't taken this liquidity. So you may view this and think, oh, I could be going long here. That would be a mistake because we haven't swept any key liquidity here. So this is basically engineering liquidity for us. This is pulling buyers in. You can see we've got relative equal lows actually there. So we've created relative equal lows, which is even another draw on liquidity on the 1 minute chart. So this is just maybe pulling buyers in too early before the move starts. We're at 311. Into this fair value gap, we've swept that liquidity. So we've swept this liquidity up here. Again, we've got a bullish fair value gap. So are we going to respect this bullish fair value gap or close through it? I'm going to delete that inversion fair value gap. Initially we're respecting it. Strong, aggressive close through. Got several things lining up here now, so this makes this a far more logical entry. Time 14, so we're just about to start a new 15-minute candle. We've got an inversion fair value gap, so this bullish fair value gap failed. We've left volume imbalances coming down. Bearish volume imbalances, very similar to fair value gaps, inefficiencies in the market. So this is showing that price is moving aggressively now, so aggressively that there's no fill in these areas, just massive gaps in the area. This could be our breaker block here. If we close below these 3 down closed candles, these could act as a breaker block. And this is going to be our order block. So we've got 4 up closed candles, so we've got an order block. So we've got breaker, order block, and an inversion fair value gap at this point. Into the inversion fair value gap, see how it gets respected, 15 minutes. You can see the inversion fair value gap is being respected. Volume imbalances for the bearish side are being respected. So because these volume balances are overlapped, I would actually be tempted to mark those as a balanced price range. We know our draw on liquidity is there. We're into the new 15-minute. We see this huge, well, this large rejection wick off this balanced price range and the 2 consecutive down closed candles here. So on the break of these lows, I'd be tempted to take the short position based on the fact that we've got the order block here, balanced price range, and an inversion fair value gap. It's being respected at the start of a new 15-minute candle. Again, I'm very confident, equal lows here, that we're going to take these out and then run for the Asia low. 2.6R. Price comes through, we've had another tap of the inversion fair value gap before a large displacement lower, breaking structure, leaving bearish fair value gaps, taking the equal lows here, a little bit of a pullback, and then an aggressive run to take out the Asia low, 2.6. So we've got 2 fantastic entries here. The giveaway for this one, the inversion fair value gap, volume imbalances, at the open of the new 15-minute candle with a clear draw on liquidity. And then now we can potentially be on the lookout for a reversal trade. We've swept liquidity, so we've taken the Asia low out. We can now look for a break of structure, which will currently be this high here, and go for the 2022 model entry. So there's our break of structure already. Look at the time, 3:30, so we're opening again a new 15-minute candle. So we've got a break of structure, we've left a fair value gap. So now let's look at the confluences that we've got at this area. So confluence 1 is a break of structure. Confluence 2, we've got a fair value gap. Confluence 3 will be we have an order block. This down closed candle. Is an order block. We have a breaker block, which is this up closed candle, which is being closed through. So you've got a breaker block with a fair value gap inside it, which is the famous unicorn entry. And at this side, our first indication that there could be a change in price delivery, bearish fair value gap, which failed. So that fair value gap there was closed straight through by this bullish candle here. So we're stacking up our potential entries. I would enter the touch of the breaker block, stop loss below the low by a couple of points. And then if this is a true reversal, you're going to have take profit 1 would be just taking out this swing high here, 1.7R, and then looking at running this to potentially take out the session high or Asia high. If we pull a stop loss from the Asia high down to, a fib, So you could have a take profit 1 as we sweep this high, take profit 2 as we go into a discount, taking these relative equal highs here. So that would be buy side there. So take profit 1, take profit 2, and then potentially leave a runner to take out the Asia high. So price hopefully will come back, tag the breaker block. That will get tagged in. So we're into the new half hour candle. 33 is when we get tagged in. And then hopefully we get a strong reaction. Respecting bullish fair value gaps now we can see. So we're disrespecting bearish fair value gaps, respecting bullish fair value gaps. Indication that we're into a buy program. Sweep for TP1. Really strong aggressive move. Pull back into this fair value gap. Do we take a run for TP2? Oh, so we've got our buy side liquidity just here. So we're into a premium now. That hits our TP2. And then we are holding a runner, if you're that way inclined, to take out the Asia highs, expecting bullish price action during the day. As we stand, we've not been stopped out yet, but we've not hit take profit 2. So 3 solid trades at this point. Really good morning to be trading. As I say, I haven't traded this live because of NFP tomorrow, but you can see some textbook continuation trades and a really nice 2022 model reversal based off the unicorn entry with a breaker block and fair value gap. So I hope you found that analysis useful. If you did, please leave the video a thumbs up. If you've got any questions, leave them down in the comments section below. And likewise, if you're enjoying the content and want to see more videos like this, then be sure to hit the subscribe button. Dropping videos like this every single day. It'd be fantastic to have you on board. Thanks for watching, and I'll see you again in the next video.